So, good afternoon and welcome to the first of our webinars. The topic this afternoon is the CIS reverse charge. This is the third time of asking that HMRC have promised to introduce this, but we are very close to the deadline now, and I don't think there's any turning back. So there are four of us involved from McGill's today. There's myself, Simon Nuttall, partner, Charlotte Dandy, and Helen Jones, both of my fellow partners. And then we've got Ben Simmons, one of our senior staff, who's going to be joining us for the question and answer, and who is also doing the slides. So if you hear me ask for Ben to move a slide on, that's Ben sitting in the background there. We've prepared a guide, a downloadable guide to the whole reverse charge mechanism, and we'll be automatically sending that to you at the end of the webinar. Plus, we will also send you a link to the recording of today's webinar as well. So if you can't sleep during the week and you need something, then feel free to listen to the webinar again. We will be using the question and answer session facility within Zoom. So if you wiggle your mouse, that pops up, and at the end of the session, we will go through any questions that are there. If you have got any questions that you think, well, I'd rather not discuss it in front of all the participants, then just email one of the three of us or Ben, and we'll give you a call or go through that later on, either today or next week. But anyway, keep your questions to the end or put them through on the Q&A session. But without further ado, over to you, Helen.
Thanks, Simon. So the VAT reverse charge for the construction sector comes into force on the 1st of March 21. It will apply to supplies of construction services on their own or when services and materials are both supplied. It does not apply to the supply of materials on their own. The scheme isn't optional. If you supply services in the construction industry and are VAT registered, you must use it. This measure is being introduced because of VAT transfer fraud in the construction sector. Transfer fraud is where a VAT registered subcontractor issues a VAT invoice. He gets paid for that invoice by the contractor, including VAT. He doesn't pay the VAT element over to HMRC. The contractor claims the VAT back from HMRC, as he's allowed to do, and then HMRC are out of pocket. This is estimated to cost the revenue 100 million a year. The revenue estimates that the new scheme is going to affect 150,000 businesses. It's formally known as the domestic reverse charge for building and construction, so some guidance will be under this name. There's a similar scheme called the EU reverse charge that was introduced because of transfer fraud when goods supplied from one EU country to the other. The VAT wasn't declared properly, and this has been very successful. So Charlotte's going to go through what is changing.
So the new CIS reverse charge applies when there is a supply of VAT of construction services and materials. The supply is also made at the standard or reduced rate of VAT. It's a supply between a UK VAT registered supplier and a UK VAT registered customer, where both supplier and customer are registered for CIS, and the customer intends to make an ongoing supply of construction services to another party. The supplier and customer should not be connected. The reverse charge does not apply where suppliers are zero rated or the customer is based outside of the UK. The key difference between CIS and reverse charge is that with CIS you do not include materials, but with the reverse charge you do. However, there is a de minimis that if materials comprise 95% or more of the invoice, the reverse charge need not apply. So if we consider the work that falls under the CIS regime, there is quite an extensive list. I'll just read out some of the key areas. So work on demolishing or dismantling buildings or structures, work on constructing, altering, repairing, extending, demolishing of any works that form part of the land, installing heating, lighting, air conditioning, ventilation, power supply, etc. Internal cleaning of buildings and structures carried out in the course of construction work. Painting or decorating the inside or the external surfaces of any building or structure. Services which form part of an integral part of or are part of the preparation or completion of the services described above. So the work that doesn't fall under the CIS regime, for all of you keen drillers or extractors of oil and natural gas, that won't fall under, and minerals, nor will manufacturing, building or engineering components or equipment, materials, plant or machinery, or delivering any of these to site, manufacturing components for heating, lighting, air conditioning, ventilation and power supply, etc. A key one to remember, the professional work of architects or surveyors, or of building, engineering, interior or exterior decoration and landscape consultants, making, installing and repairing artworks such as sculptures, etc., installing seating, blinds and shutters, and installing security systems such as burglar alarms, etc. So with zero-rated work, that would be the construction of new qualifying buildings where your services in the UK, and so that wouldn't be part of the normal development. However, even though the work would be standard rated, you still wouldn't have to apply the reverse charge. Snagging items would still be zero rated. Zero rating is not straightforward or automatic, so please do have a chat to us if you're not sure. Helen will now have a chat about who is affected.
Thanks, Shana. So most of the construction industry is affected. All subcontractors that are VAT registered that provide any labour will be affected by this change. Contractors using those subcontractors will be affected as they will need to ensure the subcontractors are billing them correctly, and end users of contractors will be affected as they will need to ensure they are declaring their status appropriately to contractors. Simon is going to go through some examples for us.
Under the new rules, VAT registered subcontractors who provide a service and any related goods to a VAT registered contractor who is CIS registered will no longer need to account for the VAT. Instead, it's the contractor who will account for the VAT as both input tax as if they've made the supply to themselves. What we're going to do now is work through an example. This is straight from the HMRC website, so the lack of political correctness, it's all chaps, I'm afraid, is down to them. So if we take an example where we have John the roofer, who is VAT registered, and he supplies materials and the roofing for a new office building to main contractor Bob. Contractor Bob, who's VAT registered, then supplies the construction services to the developer, who is also VAT registered and is working for the end user. So looking now at how that works under both the old and the new system. So in the old system, as we know, John the roofer would invoice contractor Bob 120,000, which is made up of the £100,000 invoice for materials, labour, etc., plus 20,000 in VAT. However, under the new system, John will only invoice Bob for £100,000. And on that invoice, he will state that the CIS reverse charge applies. Contractor Bob then pays the net £100,000 fee, no VAT, and then includes this within his invoice and accounts for output VAT and input VAT, including the 20,000 on the supply of John's services. John does not account for output VAT. John charges and receives 20,000 less than under the old system but does not have to account to HMRC for the output tax. So what does John do when he accounts for VAT? When he's paid, he includes the value of the sale in box 6 of his return, but he does not add VAT to box 1 as he receives no output VAT. The charge may well impact John's cash flow, as under the old rules, if contractor Bob was a prompt payer, he could hope that he could use the 20,000 in VAT to purchase his materials. He could then purchase his materials and offset the input tax against his output liability. Contractor Bob has a cash flow advantage, as he doesn't have to pay John the £20,000, and then at the end of the quarter he cannot reclaim the 20,000, as it's accounting for a reverse charge. As contractor Bob is supplying CIS services, he must also consider the reverse charge and whether his client, the developer, is involved in the onward supply of CIS services. In this case, it may be difficult to determine, as the developer is working on behalf of the end user, who is an investor, and the reverse charge does not apply. And in this example, it may well be useful to notify down the supply chain. One little wrinkle is that if you have a staffing agency or an employment agency supplying workers, they're not subject to the reverse charge. Charlotte's now going to talk us through the importance of end users.
Thank you, Simon. The CIS reverse charge does not apply to taxable supplies made to the following customers: a non-VAT registered customer, a non-business customer. The end user is the CIS registered person at the end of the supply chain who does not make onward supplies of the building and construction services, and intermediary suppliers who are connected. Intermediary suppliers are end users or intermediaries connected with end users, i.e. landlord and tenant. To be connected or linked to an end user, the intermediary suppliers must either share a relevant interest in the same land where the construction works are taking place, or be part of the same corporate group or undertaking as defined in section 1161 of the Companies Act 2006. The following and any persons connected to them have a relevant interest in land: landlords, lessors, licensors, tenants, lessees or licensees. A relevant interest in land does not include any temporary rights to occupy land to carry out building and construction services. If we look at an example now of the end user and the intermediary supplier, a property owning group may buy construction services through one member of the group and recharge those services to either group companies, their tenants, or both. All the members of the property owning group and their tenants will be end users. The reverse charge should not apply. The end client must confirm its status down the line that it is VAT registered within CIS and in writing that the supply being made to it is not an exempted supply within Article 8 of the VAT Section 55A 2019. New customers should be asked to provide details of their registration as a contractor for CIS purposes, or a copy of their CIS verification of you and retain these. It is recommended that end users sign a statement for each applicable contract. When you get the guide through at the end of this webinar, you have the suggested wording in there, which is: we are an end user for the purposes of Section 55A VAT Act 1994 reverse charge for building and construction services. Please issue us with a normal VAT invoice with VAT charged at the appropriate rate. We will not account for the reverse charge. For businesses that often deal with end users, the practical way of dealing with the question of end user status is for the business to include a statement in their terms and conditions to say they will assume that their customer is an end user unless they say they are not. This places a responsibility on the customer to respond if this is not the case. Helen will now talk to you about supplies of services.
Okay, thanks, Shana. So HMRC have defined a list of construction services that fall within the new reverse charge regime, which Charla went through earlier. However, to make things even more complicated, certain excluded services can become included. Here are 3 examples of when that could happen. So firstly, if there has already been a reverse charge service between 2 parties on a construction site, and if both parties agree, any subsequent construction supplies on the site between the same parties can be treated as reverse charge services. The second example is if there is any doubt whether a type of work falls within the definition of a specified service, as long as the recipient is VAT registered and the payments are subject to CIS, the reverse charge should apply. So if you are in doubt, use the reverse charge scheme. Thirdly, where the contractor is asked to consider all construction contracts with a subcontractor. If they can see that reverse charge applies to more than 5% of the contracts by volume or value with that subcontractor, then the reverse charge can be applied to all the contracts. The revenue have given an example of a joiner constructing a staircase off-site. This done alone would not be covered by CIS. If the joiner then installs it on-site, the whole contract is now subject to the reverse charge because of the installation element of the supply. However, this is only one of a number of scenarios which highlights the importance of seeking external advice and support, as well as the need to prepare for these changes. Simon's going to run through some points for you to consider.
So what should we be doing now? You'll need to make changes to both your invoicing and accounting procedures to take the reverse charge into account. But this may differ depending on whether you're a contractor or a subcontractor, or indeed you may well be both in the same quarter. You should also discuss and consider the cash flow implications on the business of moving to the new regime, as there may well be ways to mitigate the impact. The reverse charge will apply to all work completed after the 1st of March 2021, but it may also apply to work that was commenced before this date and completed after. Determining when the switch to the new VAT regime takes place depends on the tax point. Where the tax point is on or after the 1st of March, then the reverse charge should be applied, even though the work commenced before this date. Otherwise, if it's finished before the 1st of March, you can use the existing rules. Charlotte, further thoughts on business issues?
So if we go to the tax points, ordinarily the tax point is the earliest of payment and completion of service. This is the point at which VAT must be accounted for. If a VAT invoice is issued within 15 days of the ordinary tax point or prior to the tax point, the invoice date becomes the new tax point. If we think about completion of service, for a single payment contract, the completion of service is when the contract is finished. For a staged payment contract, completion of service is the completion of each stage. In considering retentions for a single payment contract, the tax point of the retention is the earliest of payment or the date an invoice is raised for the retention. For a staged payment contract, the tax point of the retention is at the completion of the final stage of the contract. This means that if a job is paid for in 2 or more instalments, VAT on retention is due when the job is completed, even if the retention isn't then paid until months or even years later. So for the treatment of pre-existing contracts, keeping in mind that very definitive 1st of March date, the VAT treatment of a particular invoice or payment is determined by the tax point, and whether this occurs on or after 1st of March 2021. For contracts starting after the 1st of March 2021, you should decide whether a reverse charge applies from the start of that contract. If we have a think about the VAT schemes, cash accounting, unfortunately, cannot be used with the CIS reverse charge invoices. This will have an impact on your cash flow for better or for worse, and so this is a significant issue if you are currently using cash accounting. Do chat to us if this applies to you. A business will need to review use of the flat rate scheme. The flat rate does not apply to supplies made under the reverse charge scheme. If you're not currently VAT registered, you might now decide to be, because it makes applying the rules much easier. This is because the services are caught by the new rules. The recipient business is treated as making a supply to itself of the services received for VAT registration purposes. This is regardless of whether the supplier is VAT registered or not. The supplier is still treated as making a taxable supply for VAT registration purposes too. These rules could result in a non-VAT registered business having a far lower effective VAT registration threshold. When we're thinking about the VAT payments, where both the supplier and the recipient are VAT registered, or should be VAT registered, the recipient is liable to account for and pay for the VAT to HMRC on behalf of the supplier. The supplier will not make a VAT payment on those supplies, and the first £1,000 per supplier per month is not ignored in this case. When we're thinking about invoicing, it does need to be clearly stated if the reverse charge is applying. So suppliers must show all the information that is normally required on a VAT invoice, as well as a note on the invoice making it clear that the CIS reverse charge applies and that the customer is required to account for the VAT. No VAT should be charged on that invoice, and it should state how much the VAT is due under the reverse charge, or the rate of VAT if the VAT amount cannot be shown, but that VAT should not be included in that amount charged to the customer. If you're using software to produce your invoices, and we will discuss some of those later, Helen will go through that, and your system cannot show the amount of VAT to be accounted for under the reverse charge, then the wording should state that VAT is to be accounted for by your customer at the standard or reduced rate of VAT, based on the VAT exclusive selling price for the reverse charge of goods or services. If an invoice is for multiple services, the customer must be able to identify the reverse charge goods or services. Again, there is some sample wording within the guide that we'll send you, because under the VAT regulations, invoices for services subject to the reverse charge, where the customer is liable for the VAT, must include the reference reverse charge. Some of the examples of wording are reverse charge, VAT Act 94, Section 55 applies. Reverse charge, Section 55A, VAT A 94 applies. Reverse charge, customer to pay VAT to HMRC. Where customers issue authenticated tax receipts or self-billing invoices, HMRC's recommended wording is: reverse charge, we will account for and pay the output tax due to HMRC, or reverse charge, as the UK customer, we will pay VAT due to HMRC. As with all new things HMRC bring in, they always have a soft landing, and this is the same for the reverse charge. So they understand that there will be some difficulties in implementing, and if mistakes are made, as long as they're not deliberate, then they will not issue penalties. While we're on the subject of errors, we can just have a little bit of a look at typical causes of VAT errors. It's generally down to record keeping and recording. It could be poor software or training, or lack of knowledge on VAT. So sometimes people think there are VAT on items there aren't. I think a classic is insurance, where people think the insurance premium tax is a VAT, which it isn't. So that is not reclaimable. Or technical errors. If we think about CIS, typical CIS errors are failure to determine that a construction contract is within CIS, incorrectly excluding activities from CIS, subcontractors overstating the material elements or including the cost of their own plant or their own scaffolding as a deduction, VAT registered subcontractors including VAT as part of their material costs, and failure to apply CIS to certain recharges between entities within an organisation. So Making Tax Digital has been around for a while now, and I think this will certainly make it a little bit easier for introducing this, particularly where people are using cloud-based softwares. But again, if we think about Making Tax Digital, again, the sorts of errors that tend to arise are due to the way that some software allowed late claims on the first VAT return due. And in the new system, there has been some scope for inaccurate reporting, at least on the first return. There can be the setting of incorrect codes on software. I think another classic is entertaining. You can't claim the VAT back on client entertaining, customer entertaining. Software does not automatically flag up the wrong rate of VAT, so there does need to be a little bit of knowledge there, particularly important when we're thinking about zero rating and reduced rate. It's advised to reconcile VAT to turnover when accounts are prepared and to recheck any late claims in case there is an accidental duplication of input VAT claims. So that is something that we do during the accounts preparation process. And of course, we do offer these software health checks, particularly when people are just starting out with doing VAT returns, so that we can pick up and educate on what isn't VATable. Some of the adjustments there that aren't errors, of course, would be the bad debt relief claims, credit notes, pre-registration or post-registration VAT reclaims, and the capital goods scheme adjustments. Of course, remember that the error would have to be more than £10,000 before an error notification would need to be completed. Generally, you just make the next correction on the next return. Helen will now go through the different bookkeeping softwares and any add-ons that you might need to subscribe to. Helen.
Thanks, Charlotte. So as a result of Making Tax Digital, most VAT registered business now use some form of bookkeeping software, either cloud or desktop. So a run through of the most popular ones I'll do now, just to see how they are ready for this reverse charge to come in. So Xero up there. If you go to the accounting menu, advanced and tax rates, you click on the blue button to apply domestic reverse charge. So they're all set up, ready to go. You can have a play with it if you want to on the demo data. I believe that's working. QuickBooks is not ready until the 1st of March, but there will be their tax rates to go in and apply. Sage Desktop and Sage Online have added 2 new T codes. So T21 for the standard rated reverse charge and T26 for the reduced rate. Your Sage Desktop will need to be version 26 or later to cope with it. Cashflow and Free Agent, we haven't had any instructions yet, so I'm sure their developers are working hard on it. The software packages also can help with doing your CIS returns, I know we've got some clients who do take advantage of that. Zero charge an extra £5 a month, and you can verify your subcontractors and file the CIS returns from within Xero. Sage Desktop is an extra £10 a month, and you can verify your subcontractors and file again from within it. QuickBooks Free Agent Cashflow and Sage Online, they can do the calculation, but they can't do any verification or filing. So you have to log on and use your HMRC portal to do that bit. The invoice templates within the software, the standard templates will be the only ones updated for the CIS reverse charge. If you have your own template set up, you will need to go and update these yourselves. So your next steps. To help determine how you're likely to be affected, you should ask yourself questions to see whether the new rules apply and how they may affect you to make sure you are properly prepared. So the list on screen are some that we think you should consider. So should you be VAT registered? Are all sales of building and construction services within the CIS definition? Will some works not currently within the CIS definition now fall into it? Are the supplies at standard or a reduced rate of VAT? Have zero-rated supplies been identified? Is the customer an end user? Can existing accounting and invoicing systems cope with the changes? Which staff need to understand these measures, and what training have you got in place for that? Is cash flow likely to be affected, and would switching to monthly VAT returns help? Simon's going to go through what we can do to help.
Thank you, Helen. So that's really the end of our webinar today, but just remember, you're not alone. We're here to help. We as a practice, we deal with a lot of people in the construction sector, from main contractors, developers, subcontractors, plumbers, electricians, everyone involved with the sector. So if you do want any help on any other matters, then feel free to contact any of us. So just as a reminder, we will send over shortly your guide and effectively notes for today, and also a link to the recording if you want to download that. But we've got time now, so we'll open the floor up. If anybody's got any questions, they can either type them or pipe up, turn your, unmute yourself and ask. We're more than happy to chat through those. Ben is poised to help.
No questions so far.
No questions so far. That's good. Obviously, we've filled up everyone with complete knowledge.
I think everyone's shell-shocked.
Everyone's shell-shocked, yes. It is relatively straightforward in the absolute first bit of it, isn't it? But as always, with the customs and HMRC, the devil's in the detail. It makes me cross that, every time they change something, it just puts more work, more responsibility on the business owner, more stuff to do, more penalties. No carrots, just sticks.
I think I did see a raised hand. Someone did raise their hand. I couldn't see who it was that flashed up.
Yeah, it was Tracy.
Oh, it's Tracy.
Okay.
Fire away, Trace.
Are we able to unmute people?
Mute. Hello, can you hear me?
We can.
Yes.
You can there, right? Yeah, my chat box, it says chat disabled. So I was raising my hand, but then I couldn't chat anyway.
It's the Q&A rather than the chat.
Oh, okay. Right. Double glazing, then that's my question. Oops. I always struggle to find where that sits. And like that list you displayed, it's never definitive, is it? Where double glazing sits, the installing of double glazing windows on constructions, well, in people's houses on a construction site.
So you just highlighted the difference there. If you're replacing it in someone's house, then it's not forming part of the construction of a building.
Okay.
So, and they're probably going to be an end user as well, aren't they? Because it's normally for people who are sort of already living in their houses. So that's not likely to come under CIS.
Okay.
But if you're working on a construction site and you're doing it as part of the building of a new house or part of the construction site, then that would come under CIS, because you're likely to be a subcontractor for the builder, and possibly the reverse charge, depending on the makeup of that house builder. You know, they could be a group, and you'd need the house builder to confirm whether they're an end user or not. So it would definitely, it would come under CIS, possibly the reverse charge.
Okay, because I can see that being a problem, trying to find out who where the end of the chain is.
So they have a legal obligation to tell you.
Yeah.
So if they don't tell you, then you can report them.
Right. Okay. Right.
Who do you report them to? The revenue, Ben?
The revenue, yeah. But the revenue's position is you should apply the reverse charge unless they say otherwise. So if they don't tell you and you don't want to report them, just apply the reverse charge.
Okay. Okay. And another consideration that I wasn't aware of is it's the flat rate scheme, and you're not able to use the reverse charge if you're on flat rate scheme.
So you can, but the invoices won't. So the invoices you make under the reverse charge scheme, and invoices you raise under the reverse charge scheme, won't go towards your flat rate income. So any other invoices, you could stay on the flat rate scheme and apply it to all the other invoices. But because what you've got to bear in mind is if you're reverse charging an invoice, there is no VAT on it, is there?
No.
Effectively.
No. So it can be mixed then. You're saying you could, so VAT return, if you're looking at one, it can be a mix between flat rate supplies and reverse scheme supplies. Is that what you're saying?
Yeah, because basically when you're calculating your total to apply the flat rate percentage on, you wouldn't include the reverse charge invoices in that total.
Right. Okay. But you can run them side by side then.
You can, yeah.
Okay. Right.
Obviously not with the cash accounting.
So
we've got one client. He's on flat rate scheme and cash accounting. So I'm wondering what the best policy.
So I would say the cash accounting scheme could get really complicated. So technically, you can cash account for the reverse charge for everything else, and then accrual account for the reverse charge work. But that could get really complicated when you're looking at your inputs. You know, you'd have to literally separate out the expenses between those that apply to the reverse charge invoices and those that it could get really complicated. Technically, you could run them side by side, but I have no idea how the software would deal with it. I don't think it could.
No, so it's probably best to switch then, isn't it, to go to standard rate? Because if you're on flat rate, essentially you're paying the 20%, 16.5% on your supplies.
Well,
so
most people in the construction industry won't be paying 16.5% because they're not limited costs. I don't know. I'll find out what the percentage is for.
Yeah,
So
we've
the
got
16.5% is. So if they're limited cost, that'll be 16.5%.
Yes.
Otherwise, I think I'm just looking it up now whilst you're on.
So is it best to switch to standard then, do you think? If they're flat rate and construction industry, switch to standard VAT accounting?
It depends on the situation, and if they're labour only, building and construction services, they're 14.5%, and if they're materials, if they are general building and construction services, then they're 9.5%.
Oh right, okay.
So and then obviously if they're limited cost, they're 16.5%. So it would depend on the situation.
Okay. Okay, food for thought. Thank you, Ben. Thank you.
Anybody else got any questions? We're doing okay, aren't we? We're doing all right for questions.
Rachel's got her hand up. Rachel Taylor.
Yeah.
Rachel, fire away.
Hi,
Okay.
just a question. If you've got services and materials and you do 2 separate invoices, does a reverse charge only apply to services side and not the materials invoice?
I know the answer to this one.
Ah,
Okay, so it goes on the contract. So if you're contractually supplying materials and services, then you reverse charge everything.
Okay, yeah.
Okay.
So
you
it's
can
a job as a whole rather than each different
invoice.
part.
Yes.
Yeah, that makes sense. Thank you.
see, Rachel, he said before he'd been boning up on all the rules in case an odd question came up, and you've justified his boning up on all the rules. Well done, Ben. You weren't defeated. Anyone else with their hands up? No, that looks like it. That looks like it.
Sorry, just one more. Sorry, Simon. Just one
No, you
more.
can. Yes.
Also, if you're a landscape gardener, can you zero rate your work on new qualifying buildings?
Does Simon know the so the gardening part of that is a no. That would be standard rated unless it's like trees or something that's long term and permanent. The landscaping would basically depend if it's in the plans for the new build or not. If it's in the plans,
Okay.
then you zero rate it. If it's not in the plans, then it's standard rated.
Okay.
It all goes.
you.
Ben and I are smiling because this morning he was threatening to ask me a question about landscape gardens. You see,
Oh no.
Yeah.
as a tease.
Landscape gardeners are in the middle and very difficult. They
Yeah.
are like the grey area with all of this.
The thing to remember, I think, Rachel, is that you think about someone like Taylor Wimpey or Persimmon. You know, when you buy your house, you know, it's just the grass. You know,
Yeah.
and they're looking to only allow zero rating for your basic stuff, whereas they're trying to. If you've got a very well-to-do person who's spending 100,000 on having their pond and their patio and all of that, you're going to have to pay VAT on that, whether you have it. The house is built or not, but it's a bit like, I think was it Charlie you mentioned about wine cellars and swimming pools. You know those aren't deemed to be a normal part of your of a house. So if you're going to have a wine cellar made, you can't have it zero rated.
Zero rated. Yeah, that makes complete sense.
They're the two examples I've seen in the last year: wine cellar and swimming pool. That's why they're in there.
I did wonder.
People trying to zero rate a wine cellar.
Yeah, when your swimming pool was being made in your new mansion, Ben, you couldn't have the zero rated, could you?
I know, it was terrible. I was so gutted.
Yeah. Of course,
Do you
it's
have
very
any more
difficult.
questions? Not from Rachel.
No, it's very difficult. It must be very difficult. You know, some of these houses, you've got an underground swimming pool and wine cellar. How do you split the cost between the cost of doing that and the foundations?
I know, and just think when you've got all that money, and it's like you must really worry about the 20% VAT on your swimming pool.
You'd be surprised. Some of the wealthiest people are some of the tightest.
That is true.
we digress here. Last call for questions. If anybody else has got any questions? No. Okay. Well, thank you ever so much for coming along. We'd have much rather seen you all face to face, and at this point, offering you a cup of coffee or a sneaky Friday afternoon glass of wine and a biscuit or something else. Hopefully, all of this will be over soon, and we can get back to normal. But in the meantime, enjoy the weekend. Perhaps watch the rugby on Saturday, and we look forward to seeing you all when we're doing your accounts next. Thank you very much. Goodbye.
Bye-bye.